let everybody in. All right, everybody. Welcome for the DeFi panel, the Decentralized Finance panel. We are starting to let the panelists in. We have the moderator Clayton, Kun Kasima from OMG, Kun Sawit from Ben Protocol, and Du from Maker DAO. And we should have David from, hi David from AAve.
Yep. Hello.
And but thank you very much for all joining today. It's a really great panel. And I know this is a panel that a lot of people asked us to do when we started this ETHBKK event. So really excited to have the biggest name of the DeFi and even the blockchain community here for this panel. Here you have your moderator, Clayton. I think some of you know him. I think there is no better person as knowledgeable as him for decentralized finance. So he's going to be a great host. And I prepared some questions for you guys, and I will moderate the Q&A. At the end of the day, I will join again in the session and ask the questions that they will be on the chat. So it's going to be 1 hour for the attendees. We have people on the Facebook Live as well. Please feel free to ask some questions. We're going to report them to our panelists. And I wish you all a great session. And I would like, on the behalf of ETHBKK and Atato, I would like very sincerely to thank you all and really enjoying the session. Thank you, and see you in a bit.
Cool. Thanks, Maxime. Welcome, everyone. So my name is Clayton Roche. I am both one of the founders of DeFi Nation and also the head of community at UMA. And I'm going to moderate this panel today. So I've prepared some questions to chat with you about. Kasima, Sawit, Du, and David, nice to meet you all. I would like to kind of just open up with a little intro from each of your, just about each of your teams. If you could just give an intro to what you guys do. And I'm going to go in order from how you're showing up in my gallery view. So that would be Kasima, that would be you coming up first. If you just want to tell us a bit about yourself, about your team, and what you guys are up to.
Sure, absolutely. Thank you for having us. My name is Kasima. I'm the CTO of OMG Network, previously known as OMG. Been at OMG for about 2.5 years here. Our team is primarily based in Bangkok, but also fully distributed around the world. And we make, our product is a layer 2 scaling solution for Ethereum. And right now, and that whole thing is built on a protocol known as Plasma, which I think a lot of people are probably familiar with, but I'm happy to get into that if people want to talk about that more. And yeah, right now we are very much targeted towards value transfer, but definitely exploring other applications for Plasma and seeing where it can go. Okay, you have even a few more minutes if you wanted to tell us any more, or we can just kind of keep them shorter and roll on. Sure. I could get into some of the details. I think the last panel I did, people were talking, it was kind of funny as people were talking about how it might be helpful to remind people what Plasma is, since the conversation has moved towards rollups a little bit. So I'm happy to dig into a little bit of the details there. So I'll start with just layer 2 scaling protocol. What it is basically a way to do off-chain transactions. One of the key pieces of what we've been trying to build for Plasma is to maintain non-custodiality and trustlessness. And so that's a pretty high, that's a pretty important feature for us. One of the key differences between what we've built already and what people are exploring around rollups is this idea of data availability. So with Plasma, we've built a system, or we proposed and built a system that is the highest amount of scale with the lowest amount of cost. And that was the original intention by the Plasma design, and still maintaining all the non-custodiality and trustlessness that we all like. The rollup world is taking some trade-off there to make up for data availability. And so what they do is basically put their transaction data on chain. Ours is off chain. What this does is it increases some of the flexibility of rollups at the cost of basically just gas costs, and for some of the projects, computational cost. So it's an interesting space to play in. We lose a little bit of that flexibility for scale. And so while we're not able to provide like basically currently not able to provide sort of full smart contract execution. We are exploring ways that we can do that. It does bring some complexity to the protocol, which requires a bit more research. So that's why we are pretty squarely focused on the value transfer piece right now, and especially as it applies to this panel. I think that we're still exploring the applications of Plasma and how they can deal with some of the DeFi products that are coming up. But right now, I think what we're really excited to do is to try to pull a lot of the transaction volume that is not DeFi and probably doesn't necessarily need to be on L1 off to L2, so all the cool DeFi stuff can happen at much lower cost. So that's been our focus for the past basically half a year since we launched.
Great, thank you so much for sharing that, and I look forward to kind of coming back around to that topic a little later on as we talk about DeFi and layer 2 scaling. So Kun Sawit at Band Protocol, I think you're up next. If you want to tell us a bit about Band.
Sure. Yep. So I'm Sawit, and right now I'm the integration lead at Band Protocol. What we are is a cross-chain data oracle. So we provide real-world data to smart contracts and decentralized application of blockchains. So typically what we do is we bring the data that we access in the real world, right? Such as stock prices, token prices, flight status, weather forecast, among others, and make those data available on the blockchain. So as for our current progress right now, we just had our mainnet upgrade, right? So our Oracle functionality is now live on mainnet for anyone to use. And we have also been pushing a lot of integration with various other blockchains and decentralized applications, some of which includes the examples of Binance Smart Chain, Waves, Icon, Nervos, and Phantoms, along with the apps such as Loopring, TigerSwap, Future at ICX, and DForce.
Okay, that's great. You have a little more time if you wanted to share any more details, or we can just keep rolling on. It's up to you.
I'm thinking of good.
Okay, cool. Thanks for that intro, Sawit. Appreciate it. Du from Maker DAO, nice to see you again. I'm sure that most people attending here are probably familiar with Maker DAO, but would still kind of love to have the context and background that you want to provide for us.
Yeah, sure. Once again, thank you so much for inviting. Would love to see you in person, hopefully next year or so. So my name is Du. I'm in charge of Asia PD and partnership for Maker Foundation. So Maker Foundation is behind stablecoin DAI, as well as governance token MKR. So most people are probably aware of. DAI is the largest decentralized stablecoin right now. And then, especially I think within Asia, I do get a lot of questions about what is Maker Foundation trying to do in Asia. We've been expanding to many different partners as well as use cases for DAI, especially in countries like China, Korea, and many others. So we're definitely going to see more. And then that's something that we can touch on as well, which is about how DeFi is trying to touch on more people as well as both retail and institutions. So I'm happy to share some of those as well later.
Great, sounds good. Yeah, I guess we'll just Kasima, you got the longer floor there, but other people are giving us very short intros, which is totally cool. So I will hop over to David from. I hear it pronounced different ways. I always pronounced it AAve, but let's hear how you pronounce the name, David.
Hey, yeah, thanks for having me. Yeah, I pronounce it AAve. Yeah, I think it's fine. Yeah, so I'm a developer, among other things, AAve. And for those that don't know, we're one of the larger lending platforms in the DeFi Ethereum space, more than $1 billion of locked value. We support, I think, more than 20 assets, different assets. We launched on mainnet at the start of this year in January. So we've grown pretty crazily, pretty rapidly. And we recently have started the process of decentralizing protocols. So just yesterday, we passed over the admin keys essentially to AAve holders, so they can do proper decentralized governance. And then also we have V2 that should be coming out before the end of this year, very soon as well. And we can go into those details a bit later. That's the general gist.
Okay, cool. Thank you all for that introduction. We got a very good lineup here today. So yeah, the first question that I wanted to kind of introduce to you guys is something that's just personally fascinating to me. And the question is, where have you seen DeFi already get product market fit outside of speculation? So what I mean by this is like basically where does DeFi actually have traction, have usage that exists outside of people like finding different ways to speculate on crypto assets? I think to some degree this question allows for some choosing the definition of DeFi, even what that word means, as well as I'm just curious, like where have you guys seen it either within your company or just in the wider space, product market fit? If anyone wants to chime in, go for it, or I will call on somebody. Looks like
I think I can go. Maybe.
Yeah.
Since we're talking about speculation, and DAI is pretty stable, so I think it's a pretty fitting topic. So I guess related to that, we're definitely seeing many different cases where, so DeFi can help people in many different ways, right? So I think the media, they like to talk about, like focus on like the speculation side, but then we've been also ignoring like it can actually really change how the current financial system works, right? Because people talk about how Bitcoin and blockchain technology was revolutionary, but the problem was that even with Bitcoin, you still need to trust people to even do simple things like trading, right? Or like lending. And then with evolution of DeFi, that's something that people can do in decentralized and also more efficient way. So, some of the cases that we saw, especially with Maker DAO's DAI, has been, for example, institutions like UNICEF or Oxfam using DAI to access regions that might be hard to be reached with more of a legacy system. And then as well as we saw people use DeFi for areas that legacy finance cannot really serve. So even if it's not like related to Maker itself, there are some other partners that, for example, been working on remittance, as well as tokenizing some of the assets that are difficult. I know that, for example, Centrifuge, I believe, they're also working on having like trading boys as collateral, which in legacy finance is a very complicated process, but through DeFi, it can be more efficient, as well as a lot more to participate. So once again, I think the DeFi side, people do like to focus on the speculation side, but if you also look at the value about the decentralization, transparency, as well as efficiency, I think it's something that's highly valid. I do also want to add that even within Asia, we definitely saw like legacy institutions getting interest in DeFi. We saw some rumor, which is probably true, about like a traditional banks trying out, for example, crypto exchanges, but we also saw how some of institutions learning about DeFi as well. So even in Korea, I can personally say that, for example, some of the big financial companies, they actually wrote a report about DeFi. They also even wrote by experience about doing yield farming as well as like lending on different platforms. And then, their idea was that it can really revolutionize how they work, because in the traditional market, the especially yield is very low, right? And then also it's very inefficient, but DeFi can really change it. So once again, I think that if you look at the value of it, those three things, like transparency, decentralization, and efficiency, are something that people will value and will continue to value as well.
Nice, thanks for that, Du.
Yeah, I think one of the most interesting things that's been happening, I'm not sure if this falls into your speculation or not, is just the amount of liquidity we've been able to generate. And that for me points to a certain level of product market fit. Of course, like some of that speculation does feed into that liquidity. So maybe that doesn't quite fit your model, but liquidity itself, I think, is actually a really interesting and valuable almost product, right? So one of the things that we're trying to do at OMG is, from the very beginning, is try to talk to some of these more traditional finance companies and try to get them on board into blockchain and into the crypto space and into the entire ecosystem. And one of the things we've been finding in our recent conversations is the fact that some of these companies, like Du is saying, are interested in some of the DeFi things, and some of those conversations start with liquid markets and returns and things like that. So the health of the DeFi space is actually in and of itself feels like product market fit, and it allows us to step forward into like the larger traditional finance world as well, at least in some of the conversations that we've been having.
Yeah, that makes sense to me. And I have kind of the same awareness that we're sort of building the framework and the infrastructure such that the traditional finance space could come over here and start sort of replicating. So like whether it's building certain financial products that we see analogies to in traditional finance, or like you said, just the liquidity. Like we couldn't really expect traditional finance to show up and bootstrap all that liquidity, right? So yeah, so that makes sense. I think we are laying the groundwork for it. How about David?
Yeah, just on that point. Like, yeah, I agree with what Kasima said. I guess what I don't like about these sort of questions is that you know, like speculation has this sort of negative connotation to it. I think like speculation in of itself, it's like this is product market fit in that, you know, some people find that, you know, this is the best way to speculate. They can't speculate on equities or bonds or, you know, in the real financial world. So now they've found this place which is better for them. So I think there's product market fit in that context. There's also, I'd say, product market fit with just the yields, right? So, you know, one of the reasons why people are, let's say, depositing in protocols like AAve is just because the yields are much better than they'd get in traditional finance in banking. You know, a lot of the money actually comes into the system through both DAI and USDC and other stable coins. And it's just like a better yield performing product. And then when we start talking about, you know, products and services that come out of both AAve and the DeFi space, things like Yearn Finance, you know, some of their yields come from AAve, right? And they managed to create product market fit with like a yield aggregator. Or we have other partners and within our ecosystem that have built products that seem to be reaching some sort of product market fit. One of the recent ones is called AAve, and they're an NFT game. They're not actually on mainnet yet, but they're very popular, and their thing is that they have this NFT game that underlying the NFTs are interest-bearing tokens. You know, so there's all these really fascinating things that are also outside of speculation, but are gaining a lot of traction. But yeah, I guess the obvious easy ones in the media headlines is like speculation and things like that. But I think there's definitely some product market fit that's already happened and happening.
Yeah, I think that's an excellent point. Yeah, sorry, go ahead. Go ahead, Sawit.
Sorry. Yeah, just to extend a bit on that point, right? So if we assume that we are somehow planning to build an alternate financial ecosystem, right? There's a variety of financial primitives and financial products that have seen proven usage and proven product market fit in the real world that we can definitely bring on chain and to benefit from all the advantages and benefits that the blockchain, the decentralization brings. And right now we already see a lot of them gaining traction and usage, just as lending protocols such as AAve or stablecoin products like Maker DAO or other derivatives and synthetic assets. But in addition to that, right, there's also a number of other financial instruments which I believe still had just been really cracked, and that leaves room for a lot more growth and a lot more product market fit in the DeFi market in general, such as options, insurance, and general sort of credit options, which could extend to the possibility of lending protocols being able to provide under collateralized loans to its users.
Yes, I think it's an excellent point. Yeah, go ahead.
One thing on that I forgot to mention is, yeah, so that's another sort of product market fit type product. We announced a few months ago we had a credit delegation, and Diversify, the decentralized exchange, were one of the first to conduct a mainnet credit delegation. So what that basically means is that they were able to create they were able to have an uncollateralized loan, and essentially it was the agreement was made off chain through another party, and then that other party delegated the credit to Diversify, and Diversify was able to, you know, draw a credit line of wrap BTC for the exchange because they needed it in some certain circumstance. But that's an example of an uncollateralized loan, and we're seeing a lot of interest and growth, especially actually in Asia, in Korea. They're really interested in credit delegation for whatever reason. So I think, yeah, there's some interesting things happening there in the in the uncollateralized or less collateralized loan space.
That situation with Diversify, that was enforced by a legal arrangement, right?
Yeah, exactly. So from the protocol perspective, the protocol acts the way it normally acts with liquidators and whatever else. But the credit delegator, they create a legal agreement. Coincidentally, they created an open law legal agreement, so it's an on-chain legal agreement. But essentially, it uses the traditional legal system to enforce repayment.
Yeah, that stuff is super interesting right now.
That is very interesting. So you have kind of an overlap of these two, of kind of a trustless system, but it's sort of relying on this trust-based system. And I sort of like that idea of this hybrid where we're kind of stepping away from the traditional system and government contracts over to smart contracts, but there's still a lot of space. Like there's certain things that's difficult to tokenize ownership of, and we definitely don't have credit and under collateralized loans figured out on chain yet, right? So it's kind of cool that you found a way to bridge these two, the traditional and the new kind of ways of mediating these relationships. That's cool. So actually, my next question, David, I'm actually just kind of curious. I remember seeing a headline that AAve had secured some funding, I think specifically with regard to bridging into traditional finance. Am I understanding that correctly? Could you tell us more about that, if I'm even describing it correctly?
I'm not sure what exactly you're referring to, but you know, we've had like traditional VCs that buy tokens off the market, and they announce, you know, they invested in the protocol from a token perspective. But maybe what you're referring to is a few months ago we announced that we received an EMI license in the UK, so that's a banking license.
Okay,
and that's more like related to traditional finance in that sense. And
what other, sorry though, so that but basically anything else, like what other connections does AAve have to the traditional finance space right now? Because you already mentioned the one with the under collateralized loan setup.
Yeah, so the most, I mean, so the underlies let's call it's called credit delegation. So credit delegation is more of a way that the smart contracts, you know, can give a credit line to someone else, and then the legal agreement part is fully up to the credit delegator. So it's not, we don't handle that. It's more like that person, whoever delegates credit, and it doesn't have to be a legal agreement. It can also be a smart contract. So within Yearn Finance, they have their link vault, and the link vault uses credit delegation, but it's all enforced by smart contracts. So it doesn't have to be a legal agreement. So our only real, I guess, connection to traditional finance, besides being, you know, having a company and entity and things like that, is that our UK entity got an EMI license, which is like a banking license similar to Revolut or Coinbase. So, you know, we'll do some things in that space in the future, but that's the only real connection at the moment. Yeah.
Cool. Yeah, and actually, I'm just kind of curious from Band or Maker DAO or OMG, kind of where do you see your company fitting into the future of DeFi, whether it's in the same theme of connecting traditional finance or just the future of DeFi in terms of crypto DeFi? I would call on Kasima.
Yeah, sure. Yeah, so it's really interesting right now what's happening in the L2 space, and I actually saw one of the questions about how we see L2 sort of developing. But you know, we saw DeFi summer happen. Gas prices were insane, and you know, Ethereum became a place for rich people, and I think that it goes against the reasons a lot of us got into the space. You know, we talk a lot about inclusion and financial reach and things like that, and you know, Ethereum became kind of untenable. So for us, obviously we're trying to tackle that problem directly, both as a direct like product player for infrastructure, but also generally providing infrastructure for other projects to build on us. So it's going to be kind of interesting to see that play out. I was actually speaking on a panel with some of the other L2 promising L2 projects, and you know, everyone sort of has their own set of trade-offs there. And what we're starting to worry about is this situation where people were sort of seeing where ETH2 sharding would go, where some of these projects would sort of end up into their own L2s and optimizing for whatever trade-offs that L2 has. So we're thinking through ways that we can perhaps move the liquidity or maybe even add composability across, at least somehow like mimic composability or in some way. Yeah, but for us in the DeFi space as it grows, we hope to, the beginning, the easy thing for us is that value transfer product that we take all the transactions off of L1 as much as we can for just basic value transfer. And then part two, I think all of us are sort of exploring how L2 can how we can do like basically DeFi products on L2, and also how to make all of that sort of work together, because ultimately I think the Plasma Group stated this best. I think they call it a very mature L2 ecosystem, and I think what I like about that is that all the trade-offs that happen, and there are significant trade-offs between the L2s, I think will service different kinds of projects and have different costs and different performance characteristics. And I think getting those to work well together, I think is going to be pretty key.
Nice. Yeah, absolutely. I can see that. Yeah, I think that's a good perspective. Maker DAO, I think, was definitely kind of the biggest force in the beginning of DeFi. And so I'm just kind of curious where the foundation sees it in 2 or 5 years. What role does Maker DAO play in the future of DeFi?
Yeah, sure. So a lot of it is, especially people even outside, I guess, DeFi space, when they think about Maker, they like to think of stablecoin, right? Or they like to think of lending, maybe something of leverage. But I think the closer description of what Maker's function in the system is actually credit facility, right? So whether it's Ethereum or even other stablecoin, or in the future, let's say real assets, you have those assets as collateral, and then you mint DAI with it, right? So it's similar to how you have this kind of credit line and also access to credit in the legacy system as well. So in the future, I mean, obviously we don't know what's going to happen in the faraway future. Who knows? Maybe DeFi becomes like not like for industrial revolution, becomes like because I think that each year we think that like, wow, it's very amazing or surprising, and then each year there's like a more amazing thing. So we don't know like what's exactly going to happen. But in response to like your question about like Maker's role right now as well as in the future, has been regarding credit facility. So for people, whether it's Ethereum or like stablecoin or real assets, they'll be able to use it. And then in the future, with I can imagine that real assets will become a bigger role, because right now it's still very small, and a lot of real world assets are still very tight to the crypto market. For example, WBTC, USDC is still not really like real world assets as we think about it, right? So, and also what AAve is doing is also interesting as well. Obviously, eventually that will be up to Maker governance, but it's also possible to in the future things like credit or like this kind of debt, it can be also tokenized and also used as collateral as well, which is also what happens in the legacy market. So I think in the future we're definitely gonna see more of it. But then once again, the decision is up to Maker holders and their voters. So we have to just trust their judgment, just like the US election.
Okay, go ahead, Sawit.
Yep. So for us, right, we kind of like to see ourselves as the infrastructure layer for DeFi and also for blockchain as a whole. So we like to believe that as DeFi matures and grows, the Oracle needs will also grow along with our services and our company, as most of the products that we have now rely on some sort of price feed or price oracle, be it decentralized or centralized, or let's say in the case of like Uniswap having their own price oracle. But one thing that I might add to that is that traditionally we have seen that price oracles have been mostly on the smart contract level, right? So using it for the actual mechanism of the protocol of the application. But we have at BAN, we have also been exploring how to bring the Oracle data to be able to use in the web application itself in the front end for users to see and access, to to provide a source of end-to-end decentralization of data so that all of the components data that the users will use to make their decision is decentralized and benefit from the use of an oracle. And actually, we already have 2 projects that we have tested this on and have integrated to in mainnet, right, which includes Loopring and TypeSwap, which we have just recently announced a week or so ago.
Nice. That's cool. Those are very good names to be working with. Absolutely. And I see some similarity between OMG and Band in terms of not the areas that you're going after, but just the way in which you're focusing on kind of the underlying infrastructures that are going to be relevant in the future of DeFi. David, how about for AAve? What's kind of in the near and maybe long term for you guys in the DeFi space?
Yeah, sure. I mean, so as I mentioned, more decentralizing the protocol. We also have V2 coming up. So with V2, we have been investigating different layers. So whether it's layer 2 options like Go or Starkware or any sort of Optimism rollups. So we've looked at those, also alternate blockchains like Polkadot or other things like that as well. So at the moment we're actively investigating that. We haven't really made any decisions on where to go yet. But for us, the way we see it is that the important aspect for us is interoperability and composability. I think one of the things that has worked quite well for AAve is that our ecosystem has been able to just build permissionlessly on the AAve protocol. So that's quite important to us. So in a lot of our conversations with these L2 providers or alternate blockchains is, how do you bridge from, one L2 to another L2, let's say for flash loans, or, if I have a borrow or loan on one layer, can I move that to another layer? And I think these aspects are sort of being worked on, like for the L2 blockchains. Maybe Kasima can talk about this in more detail. But that's for us sort of an important aspect. Then the other important aspect for us is it's ultimately up to the users, right? The end users, where they, what they want to use, how they want to use it, whether it becomes important for them. Because, like it was said earlier, previously with high gas prices, Ethereum becomes unusable for certain transactions. Let's say if you need to repay your loan, but gas costs is more than or worth half of your actual loan value. So for those small transactions, maybe DeFi, it could end up being like these sort of chains or these layers are for maybe the more low value, instant cheap transactions, and then maybe mainnet or something else will be for the higher value transactions. But yeah, for us, we're investigating that. It's still an open question, but we're really fascinated seeing all the different options that are popping up. We're still big believers of Ethereum, of course, and we think Ethereum is the future. So it's interesting seeing all these bits and pieces start to attach onto Ethereum.
Yes, absolutely. I agree.
Yeah, I'm totally with you, David. I think we're also, thinking a lot about well, composability is very hard. I think that's sort of like the holy grail across L2s. But we've been talking to the other L2 protocols about, or just breaking conversations about maybe just being able to share liquidity, not even share, but transfer liquidity back and forth in an easy way that doesn't necessarily have to go through some of the security enforcement. Not sure how to make that, those are really serious protocol and research questions we have in place. But I think that we were talking to one of the wallet providers recently, and they were saying how they were concerned about how this is going to play for the user, liquidity being locked up in these islands, and we're sort of at risk of segmenting all the projects, or what happens is, projects that are very focused on composability or really need composability will crowd into one L2, and then you sort of have to recreate some of those problems again. So yeah, I think for us it's a matter of like, we want to see the entire space grow. I think it helps everyone. And so like those conversations we're beginning to think about that stuff right now.
Yeah, for us as well. One of the things that was interesting because we're both actively researching and talking about this, but also we're involved in a number of hackathons. So this actually became one of the hackathon ideas that we had, and someone's actually created this, where it's essentially fast withdrawals. So they use something like credit delegation, where you can have liquidity providers on the L2 and the L1, and then they will perform the fast withdrawal. So hopefully things like that can also be a potential solution. It doesn't have to be on the core protocol level. It can be, you know, use LPs on top.
Yeah. There are definitely pragmatic ways for us to approach it, and that one actually comes up quite a lot, and that might be enough. I mean that would make it a lot easier for a lot of the pain that exists already.
David, when you say fast withdrawal, do you just literally mean it doesn't need to be an on-chain transaction to withdraw your funds?
No, it still ends up on chain, but one of the problems, let's say, with whether it's optimistic or these other L2s, is generally there might be like like say Matic, I think they have like a 6-hour or 24-hour withdrawal period. You know, others might have a week period where before it's properly confirmed on the L1. So the fast withdrawals, essentially you have an LP, a liquidity provider on both layers, and they will essentially give the money to the person on L1, and they'll take the risk, and you know they take a fee of some sort. So that's the fast. From the user perspective, it becomes instant,
Sure.
And that's all that matters, I guess.
Okay, that makes sense to me. And I would presume then there'd be a slightly different cost to a fast versus slow withdrawal for that privilege.
Yeah, you're paying for future money.
Right.
Yeah, exactly. The LP would make, you know, they need to be incentivized in some way. So they will probably charge some fee or something. But it could be cool because, you know, if you have many different LPs, and it becomes a competitive process between, you know, who charges the less or who do you trust more to send you the funds on L1. That could be quite interesting.
Yes, absolutely. Yeah, we would expect it to converge to like a good market equilibrium, right? So totally different change of pace question for you guys, a little bit, still in DeFi. So recently I just put together a kind of a savings fund for my godson, who is here in the Philippines, where I am right now. And so I solicited funds from people to put together this fund for him, which he'll have access to in 18 years. And it was really an interesting experience because I'm thinking like, what funds are still going to be good in 18 years? You know, what is this stuff going to be worth, right? And I also, so I collected funds from different people, and some people sent ETH and some people sent, you know, utility tokens or whatever. But I ended up with plenty of USDC. And my question for you guys is, in 18 years, what percentage chance do you think that USDC is going to be worth anything? And why? Like if my godson goes and opens his wallet, his DeFi wallet in 18 years, and he's got these USDC tokens, are they going to be worth like my 2017 ICO question tokens? Or are they going to be like those weird shit coins that went into the, you know?
I have a protocol question about your statement or your requirements. Is there any liveness requirement? Like, can we check in on the USDC every year?
Oh, right.
Like, yeah. Do we open it in 18 years?
So, like, I am curious, like, what's your like long term on these kind of fiat coins, maybe? But yes, absolutely. It's not like it's a black box and I can't open it for 18 years. So yeah, actually, yeah, I like that. Like, if you check on it once a year, that's a good answer.
So I think for us, especially around the value transfer piece, we're pretty excited and bullish on stablecoin growth. I don't necessarily know if USDC in its current form, I don't know if you put it on your ledger in its current form and then you open up in 18 years, but I think the value will stay in some way. I'm sort of thinking through things like the possibility of changing of that organization or token swaps along the way. But I think the whole market around stablecoins, we're very excited about, and we think that's going to be we're very optimistic about that potentially being the next killer app for crypto.
Okay, nice. Anyone else?
Yeah.
Wager.
So, many, including my friends and family, they ask me like, what do you think is the best investment? And I always tell them, the best investment is investing in yourself. So don't trust anything, right? Because who knows what happens. But actually, that's an interesting question, and I think that is actually a question that, including many in like a community, they ask around too, right? Because the idea, like, okay, so DAI is, for example, more decentralized stablecoin that does have, you know, more fiat-based stablecoin as collateral as well. But in the future, what's going to happen? The answer, obviously, we don't know. But at least for USDC, I think I think it's kind of wrong for people to just compare all fiat stablecoin as the same, because stablecoin, like for example USDC or POX, they go through much stronger audits, right, compared to some others that we know but shall not be named, right? So I mean, we don't know. We'll see. But I guess my point is that I guess it's not just because based on fiat-backed stablecoin. I think it really depends on what kind of fiat-backed stablecoin it is. So.
Okay, nice.
Yeah, for me, I kind of agree with what Kasima said as well. I think the value will definitely stay, but the form that the future USDC might take might differ depending on any future protocol changes or the handing over of the actual token to maybe another organization that is responsible for handling it. But unless something, which I'm not sure what as well, goes seriously wrong, I still think that the coins you hold today, if you do nothing with it, can still be exchanged for the same value that it is today.
Yeah, that's it's interesting because I thought we would all be more like cypherpunk, talking about the collapse of traditional finance or something. So I'm more swing on the other side of the fence, where I think maybe in 5-10 years, I think maybe the unit value of USDC will stay the same, but I think the buying power will be dramatically reduced. I think, you know, with the Fed printing and all these macro things happening, I think the value of USDC will go dramatically lower. So I'd say, Clayton, you know, ensure that you have some sort of maybe smart contract mechanism where, you know, you can have certain people where they can easily swap in and out, like convert the USDC to like some other coin, stable coin, and things like that. I'd personally hold it in BTC rather than stable coin, but that's just me.
David, I'm definitely not denying the possibility of the value of the dollar falling over time, but yeah, I think I would agree with you on the BTC piece too.
Yeah, right. It's an interesting question because I'm asking you like on several different levels, right? Like, will Ethereum still work, and then will USDC still be redeemable for $1, and will $1 still be redeemable for anything that anyone cares about? Like, those are all those questions are tied up in that one little basket, right? And you're right, David, you would almost expect all of us to be like extremely cypherpunk about it and thinking that it's all going to fail, and do as the representative of the decentralized stablecoin is supposed to say that you know, we should at least be using like not a fiat backed one, but pretty level-headed answers all around.
You should put it in DAI or something, right?
Yes. Yeah. Right. Yeah. No. Absolutely. And then, you know, for what it's worth, of course, it is earning. It is going to be earning DeFi returns. So hopefully, at least if the dollar goes down in value, there'll be more of them after these 18 years. So sort of somewhat similar question, and actually one that you guys weren't prepared with, but like, what do you guys think about PayPal accepting crypto? Do you think that that is like a real bull flag? Do you think that that's a sign of like my mom has a PayPal account. She's never owned crypto directly. Like, is my mom going to have crypto in a few years? Is that just a marketing gimmick somewhere in between? What are your guys' reaction to that in the context of DeFi? This is kind of an American focused question, I think, to some degree. I think it's just for Americans. I'm not actually sure.
Yeah, I think it's only US based PayPal users that have access to it. But I'm pretty bullish. Like I think that's great use. I think the more access to crypto assets, I don't really think of, you know, as you know, for BTC or for ETH or for DeFi. It's more just, you know, people are getting more financially educated these days, and you know, it becomes a lot more frictionless to, instead of just storing your money at your bank and returning 0% interest, like maybe you can buy some equities or go on Robinhood or put some in BTC or in these other assets. So I think it's a good thing just for humans in general to get more financial education.
Sure. Absolutely.
Yeah, and I feel like it shows that the big typical financial enterprises are also definitely taking a notice at cryptocurrency and blockchain as a whole, as we have seen with the really famous MicroStrategy purchase of Bitcoin. One thing that I'm kind of iffy on is, from what I understand, and I might be wrong, the only thing that you can do for now on the PayPal Bitcoin feature is to buy and sell on their app, on their platform, right? You can actually send Bitcoin between wallets or between PayPal accounts. So I'm not sure if that's just a start or if they have any reasons behind that just yet.
Yeah, so I think that's right, and that was sort of eyebrow raising for me too. But I think I listened to some podcast where someone's speculating that they're still building up to the regulatory compliance for it, so that's why they're not letting people go in and out. But yeah, I generally agree that it's a bullish sign for sure. I mean, I think someone threw out some numbers that was like, man, it was, I don't remember the exact numbers, so I'm definitely going to fudge it, but something like the number of accounts on Bitcoin is dwarfed by the number of PayPal users globally. So like the access to crypto with PayPal's user base is amazing.
Yes, totally. And I've used PayPal for a number of years, and it is amazing to me to think of them being a gateway, like if they're possibly a kind of a fiat to crypto gateway. Of course, if you can't send the funds anywhere, it kind of loses, like it neuters a lot of the purpose of it. But if that's like the first step towards that, I think that's pretty big. Yeah, so it's very interesting to me that happened. So I had a question for you guys about yield farming. We saw this kind of this craze happen over the summer, which when the gas fees went so high and whatnot. Yield farming it's kind of like a way to bootstrap liquidity of the particular token that you're giving away. I see it kind of as a fundraising mechanism, and I'm just curious from a fundraising design perspective. Do you guys think that this like sushi swap type yield farming model will sort of see it again in the future, or was it just kind of a temporary fad?
I guess I can go first. I do have kind of strong opinions, but probably should be a little moderate. So
no, strong, bring it.
Nah. Anyway, but no, I mean, so the interesting is that we talk about all the success case of yield farming, right? But then the truth is that there are also a lot of many failed cases. The reason why a lot of people don't hear about so-called failed cases is because A, people don't care, and B, because they failed, so people don't hear about it, right? So I don't think it's necessary that yield farming itself kind of failed, but it's the idea of, okay, I think it's the same for ICO or any others too. Like, okay, if you're trying to raise fund, or let's say you're trying to attract liquidity, and you're trying to provide tokens as value, what kind of value does the token have in the first place, right? And then I think that's what we kind of saw, like after the, for example, first boom of, let's say, Wi-Fi or Sushi Swap, what people realized is that, okay, they were valuable because they were able to provide some kind of product, but then actually a lot of them, like that came later, were just simple forks, or sometimes they didn't have a product, right? They just did liquidity for the sake of liquidity farming. So I think in response to your question about, okay, is liquidity, like yield farming, still going to be here? The answer is yes. I think it's going to be here. And then even before this craze, like if you think like really back, right? For example, if you think about like Steemit, right? People can write blog and get coin, right? Or if you think about like Storm, where people can, for example, watch ad and get coins. Like, so that kind of doing some kind of interaction or actions or activities to get coin is something that's pretty ancient, I guess, within blockchain. So I don't think that will disappear. But the question about whether it's going to be as effective as when it first came out, so far I think the evidence has been shown that no, and the evidence has shown that people now, they ask like, okay, what is the purpose of this token, instead of just speculation side.
Yep. Good points all around.
Yeah, I'd agree on yeah what Duy was saying. I think also probably similar to ICOs, they become some sort of building block that people can use, but in a way it also becomes a bit of a dirty word, because in its current form doesn't work as well as it should, due to just human incentives. I think one thing for Aave, where we decided not to go down that sort of liquidity farming craze, and we called it like safety farming. So within the Aave protocol, you can stake your Aave token, and part of that is you do earn like an incentive, but the reason why you're staking is that you're helping to secure the protocol, because in an event of a catastrophic event, your funds are at risk to save the protocol users. Essentially, so for us, that's safety farming. There's like an inherent value in that action, and there's inherent risk, and then also importantly, there's a cooldown period of withdrawal. So it's a 10-day cooldown period at the moment. So you can't just go from farm to farm. It's like we attract a certain type of user, because I think in other say yield farming activities, there are people that are chasing profit, and there's nothing wrong with that, but it's just a certain type of user that does that, and I think they will chase wherever the profit is, and maybe next week it won't be yield farming, it'll be something else. So I don't think yield farming is very sustainable, but I think things like safety farming or other models where you're actually providing some useful value is good.
Nice.
Yep, I agree on that as well, because we also have like a staking mechanism on our chain, so people can delegate their band token to the validator on our chain that they trust to operate our chain and to provide the data. So I believe, but for the yield farming part, I do believe that the mechanism itself is valid, but right now I think people it's being tainted by all the, as has been mentioned, the profit hype and the the money grab, and most of that I believe comes from the like insanely high APY that most of the successful farms have, which in the future I still think that real like projects that can have real product market fit might still have relatively attractive APYs, but I believe that the number will go down as the industry matures. And I think, yeah, the mechanism should still be valid, but the incentive for people to do so might not be as prominent.
Nice. That makes sense to me too. Yep. Those are all good thoughts on it. Hey, Maxime.
Hey, no, I think I can listen to you guys for one more hour. Actually, it's super interesting. Everybody here is very concentrating and listening to your very great replies, and really appreciate for that. Just on the Q&A, we have just a couple of questions, but one actually that I was wondering myself, someone asked for the kind of amazing API that we can have on Aave compared to something like Compound, where for USDC you have like 3%, and on Aave you have more than 12. Genuinely interesting about what would be the reason behind, how does it work? It's more for David, yeah, obviously.
Yeah, sure. I mean, that's a good question. It comes up quite a bit. So for the APIs and interests, it's based on certain parameters, and the largest parameter is just utilization. So how much are these assets utilized? And we have an interest rate curve where essentially the rates might be very similar to the compounds in that, let's say when they're under, let's say 70 or 80% utilization, it will be reasonable. But when it jumps above a certain threshold, then the interest rate skyrockets, because we want to attract more depositors. So that will be one of the reasons, in just that it's being more utilized for whatever reason. Most likely, we work a lot with our ecosystem partners. So our ecosystem partners are always, building on top and adding more funds and borrowing funds and things like that. And then also, in addition to just general utilization, we have flash loans as well. So for each flash loan that happens, there's a 0.09% fee that's applied to flash loans. So when someone takes out a $12 million flash loan, there's 0.09% of that goes to the depositors, and that increases the APY as well.
Get it. Okay. Very interesting. Thanks for that for the reply. And yeah, one more question, and I think it's more for Kasima or maybe Du. There's a lot of talks here in Thailand about CBDC. The Bank of Thailand announced already some trials on it this morning. And well, we are talking about stablecoin here. And I would like to have your opinion on it. Do you think it's going to be a part of DeFi in the future? How will it be integrated with the platforms that you are representing today?
Yeah, sure. I guess I can go first. So I think it's similar to how we are already, well, I'm not supposed to read. So how the Maker platform already uses other stablecoin like USDC. So if there's a, okay, my screen just blacked out. Okay, can you guys hear me?
Yeah, we can still hear you.
It's all good.
Sorry, my computer is not failing, but hopefully you guys can see. But so regarding it, so as long as it's a good source of collateral, the Maker system doesn't mind. So for example, if there's a good source of collateral that comes from Thailand, even if it's a stable coin, even if it's pegged to, let's say, different currency, it can be used. So I don't think it's like a mutually exclusive thing. The question about very, I guess, not just centralized stablecoin, but central stablecoin operated by the government is an interesting question that I get a lot personally as well as publicly. I think it's kind of too early to tell because I mean we definitely saw a lot of, especially within Asia, right, where the governments are trying, including China as well, they're trying to have this kind of one that's operated by the central bank, but that we haven't seen how it's going to interact really with crypto yet. So I think it's too early to tell. But once again, if it's something that can be a good source of collateral and is stable, that's perfect for Maker system.
Thanks a lot for your reply. And maybe Kasima, being Thai as well, you have a point of view on this part.
Yeah, absolutely. All the CBDC stuff is both very exciting and also sort of complex to dig into. As an infrastructure provider for us, I think we hold a view of CBDC that is pretty positive for the crypto space. I think for us, we would love to be part. When we look at the problem of retail CBDC, they talk about having people directly interacting with a claim on the central bank, and the transaction volume necessary for that is pretty high. And so we can bridge that and still hold sort of the same trust assumptions at the root chain level. And we can offer basically services for retail CBDC in combination with some root chain system. The tough part, I think, is where the motivations and impetus from the central banks and how they're looking at CBDC is pretty complex, right? The motivations come from all over the place. And in some ways you can, from what I've been learning, is sort of view some of it as coming from a place of concern around this sort of the secondary financial system that we're kind of excited to build, right? So to even out sort of the playing field. For that, I think there's going to be a lot of shakeout between what the central bank thinks of as a sovereign currency and what they're going to have to how that perspective is going to adjust if they're going to address that concern. Right. There's specifically, there are reasons that the central bank is investigating. Central banks around the world or sovereign wealth funds around the world are investigating down this path. And when we look at some of the design requirements that these central banks are coming up with, they don't necessarily address those concerns. Right. They're basically trying to replicate some or even increase some of their governance and control over the currency, which on a lot of levels makes sense, right? It boils down to things like national security and things like that, and your sovereignty. But I think that if we're going to get to a place where the CBDCs are going to be, how should I put this? If we're going to get to a place where CBDCs really fulfill the need that crypto seems to be fulfilling, I think they're going to have to do, and there's going to have to be some kind of integration across the two. If not to the actual liquidity pools, then maybe just even to the ideas and products, you know. So I think like, yeah. So I think that's sort of like, it's that discussion can go on for quite a while.
Yeah, right? I think so. And yeah, we almost have just 3 minutes to finish. Clayton, maybe you would like to ask a last one, very short one to finish.
Sure. I don't know how people are going to keep this question short, but that'll be kind of the fun of it. So in DeFi, what's the worst that can happen?
Quickly.
I mean, the world economy can pull, you know, rug pull, or I guess something like that.
Okay.
You know, people like to joke that the world economy itself is a big rug pull because US dollar itself is not backed by anything. Oh yeah. Anyway.
So the entire world economy is like a yield farm that could be rug pulled.
Yes. Once people realize, like, okay, what kind of thing I'm holding, right? Because you're basically yield farming your own salary in a way, right? You're earning money, but money keeps getting printed. And it was half joking, but there's some truth to it. So, you know, something to think about.
Yep. Anyone else? What's the worst that could happen in DeFi?
I think one of these very foundational and fundamental projects like somehow has an issue, and that particular piece of the infrastructure somehow fails to hold up the rest of it, and the whole thing can collapse. I think that's like the biggest concern I have.
Okay, I love this very optimistic close. David and Sawit, what about you guys?
Yeah, similar thoughts, I think. But specifically for DeFi, I think it would be catastrophic if something like Maker specifically, or DAI, when DAI loses its peg, it's pretty bad for DeFi. I think sort of Maker is so intertwined in DeFi at the moment that it plays a pretty important role. So I'll say that's the worst case scenario.
I'll try my best. No worries.
Yeah.
Yeah.
And I hope to make a
We're counting on you.
Keep the peg.
Yeah, just keep the thing at 1. Just, you know, put the mouse wheel onto the 1, and then you're good. No. Sawit?
Yeah, for me, I think it's if like somehow we stop like the rate of innovation and new products, new ideas coming out, just stop, because I feel like part of what keeps DeFi interesting and what keeps people staying in it is seeing something new, seeing something built, and us being, I believe, quite early to this. If everything just stops, I feel like people will start to diverge away to some other thing, or maybe back to the fiat economy and financial system.
Yep, I think.
Well,
yep,
it's a good reply to finish this panel, and thanks Clayton a lot for your great questions and great moderation. I would like especially to thank AAve and OMG. You know, without you guys, I mean, this event couldn't be what it is, and thanks for sponsoring it. Really appreciate your help on this one. And thanks to Ben, thanks to Maker for joining this panel. I think we could go on for an hour more, but we will go and talk about ETH 2.0 in 5 minutes with Proto from the Ethereum Foundation. I think there is a lot of questions here as well, but I really would like, on the behalf of Fatato and everybody here in Thailand who joined this panel, to thank you very much, and hope to see you soon for a real interview, a real panel this time. Thanks a lot, everybody. And
Thanks so much. It was great meeting everybody.
Yeah, thanks a lot.
Thank you.
Thanks.
Thank you.
Bye.
Bye-bye.